All right, let's talk about a big name in the investment game, Aditya Birla Sun Life AMC. Today, we're giving them a full financial checkup. We're not just going to look at headlines. Nope, we're digging right into their public filings to see what the numbers really say about their health. So, let's get right to it. So here's how we're going to break it down. First up, we'll figure out what exactly ABSL AMC is. Then we'll follow the money in the revenue story. After that, it's all about the bottom line. What's the real profit? We'll get a snapshot of health from their balance sheet, and then we'll wrap it all up with the final diagnosis. Simple enough, right?
Okay, first things first. Let's get a handle on what this company actually does. What is ABSL AMC?
Well, if you look at their own filings, they keep things surprisingly simple. They operate in just one segment, what they call the asset management business. That's it. No complicated side businesses, no distractions, just one core focus. But, what does that actually mean in plain English?
Think of it this way. They're basically professional money managers. You, the client, give them a pool of money. They take that capital and invest it in things like stocks, bonds, you name it. And their whole job is to make that pile of money grow. Pretty straightforward, right? This is the engine that drives their entire business, and it's key to understanding everything else we're about to look at.
Okay, so we know what they do. Now let's see how that translates into actual money coming in the door. It's time for our second section, the revenue story. Let's follow the cash.
Whoa! Okay, take a look at this. This chart tells a pretty dramatic story. If you go back to September 2021, they were pulling in about 324 crores. Then you see a dip, right? By March 2023, it's down to around 291. But then, look at the most recent quarter. A huge jump all the way up to 424 crores. I mean, that's not just a comeback. That's a massive surge. Really impressive.
So, the big question is, where did that giant leap in revenue come from? Well, the company's filings make it crystal clear. The vast majority of it comes from one single place: fees and commission income. It's that simple. The more money they manage for people and the better they do it, the more fees they earn. That's the business model, and it's clearly firing on all cylinders right now.
Okay, making a lot of money is great, but what really matters is how much you get to keep, right? So now we're moving from the top line to the bottom line. Let's see how much of that revenue actually turns into real, hard profit.
The path from income to profit is actually a pretty simple recipe. You start with your total income. That's all the money coming in. Then you take away your total expenses, the cost of doing business. After that, you got to pay your taxes, and whatever's left at the very end, that's the magic number, net profit. All right, let's plug in the numbers from their latest quarter. Step 1, total income. When you add up their main revenue plus any other bits of income, you get this, a cool 520 crores.
Next up, we subtract the expenses. As they say, you have to spend money to make money. For them this quarter, the cost of running the show, salaries, rent, all that good stuff, came out to just under 185 crores.
So you do the math, and what you get is a profit before tax of about 335 crores. This is a really important number because it tells you how profitable the actual business is before the government takes its cut.
And now for the grand finale. After taxes are paid, we arrive at the bottom line. The net profit for the quarter is 242.34 crores. This is the number that really counts, the actual profit the company walks away with.
But is 242 crores a good number? Well, a number without context is just a number. So let's compare. Back in September 2021, their net profit was about 170 crores. Now, it's 242. That's a huge difference. It shows they're not just bringing in more money, they're getting way more efficient at turning that revenue into actual profit.
Okay, profits tell us how the company did over the last few months. But the balance sheet, that's like taking an X-ray. It gives us a snapshot of the company's financial health at one specific point in time. So let's take a look. So this here shows us what the company owns, all its assets. And it's pretty clear what's going on. A whopping 88% of everything they own is in investments. For a company like this, that's not a surprise at all. Their main asset is the money they're investing. It's the core of their entire operation. And now for the ultimate test of any company's books. Do they balance?
And the answer here is a big, resounding yes. Their total assets, around 3,640 crores, are perfectly matched by their liabilities plus their equity. All that means is that everything the company owns is accounted for. It's a fundamental sign of a financially sound and well-run ship.
All right, we've gone through the revenue, the profits, and the balance sheet. We've done the full checkup. So, what's the final diagnosis? Let's boil it all down to the key takeaways.
So if you remember just 4 things from all this, make it these. 1, they had a fantastic latest quarter, with both revenue and profit shooting up. 2, this isn't just a blip, it's a major rebound from where they were before. 3, their whole business lives and dies by fee income. It's a pure asset management play. And 4, their balance sheet shows exactly that, since it's almost all financial investments.
So, we're left with this final question. The latest quarter was, without a doubt, impressive. But the world of investing is incredibly competitive, right? There are so many choices out there. So the real question isn't about what they just did. It's about what they're going to do next. How do they keep this amazing momentum going in such a crowded market? That's the real test.